Understanding the S&P 500 is absolutely crucial for all investors, especially for brand new investors. And the great news is that gaining exposure to the S&P 500 is much easier than you think. And by the end of this video, I'm going to show you some of the easiest ways to get that exposure to the S&P 500 index that you're looking for. My name is Davidson with the Cashflow Academy, and over the past 25 years, we've helped tens of thousands of people learn how to grow their wealth through smart investment strategies. In today's video, we're going to discuss 4 key things. We're going to discuss first what the S&P 500 index is exactly and explain in detail how the index works. And then 2, we're going to explain and discuss why we would like to invest in the S&P 500. And then the third thing we're going to discuss is how you can go about getting that exposure to the S&P 500 index with low-cost exchange-traded funds. And then the fourth thing we're to discuss, most importantly, is what we can do to protect ourselves if the bears came out to play and market volatility were to rise. By the end of this video, you're going to have a very clear plan on how to get started, and you'll be glad that you did. So what is the S&P 500? The S&P 500 is a stock market index that tracks the 500 largest publicly traded companies in the U.S. Companies you've all heard of like Apple, Microsoft, and Amazon, just to name a few. It's widely considered a good representation of the overall stock market and the U.S. economy as a whole. Instead of investing in just one company or trying your hand at stock picking, investing in the S&P 500 gives you exposure to a broad range of industries and sectors all in one shot. What you're looking at here is what's called a market heat map. And this is a good representation of the stocks that make up the S&P 500. Now, all 500 stocks are not in here, but these are stocks listed by sector and by market cap or market capitalization, which is essentially how big the company is. So, for example, up here in the top left, you can see the technology sector, and the big fish in the technology sector pond are Microsoft, Nvidia, Apple, AVGO, Oracle, Adobe, so on, just to name a few. And then there's a whole bunch of smaller companies that aren't as big as the Microsofts and Apples and Nvidias of the world that also make up the S&P 500 in that technology sector. And then there's stocks in the communication services sector like Google, Meta, Netflix, Disney. And then in consumer cyclical, stocks like Amazon, Tesla, Walmart, Costco, Home Depot. And then we have financial services like Visa, MasterCard, JP Morgan, Berkshire Hathaway, just to name a couple. And then we've got stocks in healthcare like United Healthcare, Eli Lilly, Johnson & Johnson, Merck. Again, these are all companies you've heard of. In the industrial sector, you've got GE, you've got LMT, you've got Raytheon, you've got a bunch of companies in the industrial sector. You got stocks in the real estate sector, the energy sector, of course, with energy giants like ExxonMobil, Chevron, ConocoPhillips. And then you've got your utility sector. And again, that's not all the sectors, but we've named the primary sectors and some of the bigger stocks in that. And the S&P 500 contains all that, again, in a basket of 500 stocks in the index, which gives us automatic diversification. Why would anybody want to invest in the S&P 500? Well, first of all, it has a tremendous track record. Over the long run, it's averaged about 10% annually. And now, we can't guarantee that, of course. We know that past performance does not guarantee future performance, and that investing and trading has risk. But the S&P 500 has a phenomenal track record, again, about 10% annualized returns over the long run. And again, it gives us automatic diversification. Now, we could, of course, try our hand at stock picking, stick our hands in the hat, and try to pull out the very best stocks, and there's certainly reasons to do that. It is possible to actually beat the S&P 500 if you pick the right stocks, but that takes some skill and that takes some knowledge, and that's something we can help you out with over at the Cashflow Academy. That's something that we do. Now, when it comes to the S&P 500, again, that automatic diversification is a good thing, and there are other indices that you can potentially invest in. You've got the NASDAQ 100, you've got the Dow Jones Industrial Average, also known as the Dow 30, and you can even invest in things like the Russell 2000 index, but bang for the buck, the S&P 500 is pretty tough to beat because it's pretty well diversified, it's heavy in tech, but it also has exposure to basic materials, industrials, the energy sector, the financial sector, the healthcare sector, utilities, and it's just a wide basket. We cast a wide net, and that's one of the big benefits of that S&P 500. Plus, when you learn to invest in the low cost of the exchange traded funds, there are options available for us where we can also generate income writing covered calls, for example. We can buy protective puts to cover our asset. And those are things that also take skill, which we can help you learn how to do. And again, that's something that we've been teaching people how to do for years now over at the Cashflow Academy. So if you want to learn more about it, of course, come hang out with us. Now, let's take a moment to list some of the pros and cons of investing in the S&P 500 index. Now, again, when it comes to investing in the S&P 500, we just want to be very clear. There are definite pros and there are some cons. On the pro side, the number one pro, the biggest positive, is diversification. You're investing in 500 companies all at once. In a nutshell, again, you are bullish on the entire U.S. economy. It has had strong long-term returns. Again, historically speaking, the S&P 500 has provided solid returns. And one of my favorites is the simplicity of it all. It's easy to invest in and to track and to manage, and even to manage the downside risk on if you know what you're doing and you're authorized to use options so you can protect that asset using protective puts. Now, on the con side, again, there's market volatility, and while generally the S&P 500 has a little bit less risk than individual stocks, the S&P 500 itself can still be affected by downturns in the market or market crashes, but in the long term, those things will recover and the economy tends to grow over time. And so on average, again, the returns are pretty strong historically if you stay in it for the long run and you don't panic. Now, one of the other cons, of course, is there are no guarantees. Past performance does not guarantee future performance or future returns, but the track record of the S&P 500 is one of the huge selling points. And again, it's easy enough, especially for beginners. If you don't have a brokerage account yet, and you need to open one, and you're not sure which brokerage to go with, you can quickly Google best brokerage for investing in exchange traded funds in the USA or wherever you are for that matter. If you're outside of the USA, that's fine too. You can Google that and you'll find a list of some of the top rated brokers. If you're inside the US, Charles Schwab, Fidelity, Vanguard, they're excellent. There are others, of course, that are on that top list. If you're outside the US or you just want one of the best brokers out there, Interactive Brokers is a phenomenal brokerage for doing that. And again, what you want to be able to do is open up that brokerage account. And once you have the account open, you simply want to go look up some of the best exchange traded funds out there. And two of my favorite for trading the S&P 500 is the ticker symbol SPY. SPY. You pop that in, that'll open up a chart of the Standard & Poor 500 exchange traded fund ETF. That is what's called the Spiders brand of exchange traded fund. And they have all kinds of exchange traded funds for different sectors, different types of parts of the market. And there are other options out there, of course. There's another one that's called VOO. That is the Vanguard S&P 500 exchange traded fund. It's the same 500 stocks. This is just Vanguard brand exchange traded fund. Same basic price, same basic chart, basic setup. All of these exchange traded funds are optionable. They're low cost. Bang for my buck, my personal preference is the SPY. And what I like about the SPY is just how liquid it is and the fact that it also trades lots of options. Now, for beginners, if you're not ready to trade options yet, of course, you need to learn how to trade options. You want to take classes, and that's something we can help you do over at the Cashflow Academy. But the idea behind options is you have lots of choices, different contracts, different expiration dates, and you can buy and or sell options that will give you the choice on how you want to buy or sell the underlying asset, the SPY. The one caveat is you have to have 100 shares of the underlying instrument, the SPY, to write a covered call for income or cash flow, for example, or to buy a protective put so that you can have insurance on your investment. Those are phenomenal choices you can make make. Again, those are options available to you, if you'll pardon the pun, that give us more choices. And one of the reasons we like to invest in the exchange traded funds like the S&P index is because we can have those choices or those options where we can generate income and cash flow and or protect our investments more intelligently. And just like that, now you know how to invest in the S&P 500. We like to use those exchange-traded funds because they're low cost, they have low fees, and they are ideal for beginners and ideal for those retirement investments. If you found this video helpful, you know what to do. Hit the like button, hit the subscribe button, and ring that bell so that you can get future notifications of our videos. And click here to watch the video on how to invest in a Roth IRA so that you can reap those tax benefits and come hang out with us over at the Cashflow Academy, where we make investing simple, real, and fun.